Hey, John, this lawsuit gives a new look inside the room, or at least the chat rooms over at Robinhood during the GameStop short squeeze. These internal conversations from back in January show debates over how bad it could get, some panic over capital requirements, and a direct contradiction of what Robinhood CEO told CNBC's Andrew Ross Sorkin at the time. On January 28th, the company's COO messaged internally that Robinhood, quote, had a major liquidity issue. CEO Vlad Tenev, meanwhile, denied that in an interview with Andrew. That week, though, Robinhood did move to change stocks like GameStop and AMC to what they call position close only, meaning that people could sell, but they couldn't buy. In response to that decision, another executive says, we're going to get crucified for those restrictions. It's a, quote, horrible look, they say, for the wider brokerage industry. And meanwhile, the COO of Robinhood Financial, that's a subsidiary of Robinhood, saying that the company was, quote, too big for them to actually shut us down. He's referring there to its clearing agency. And in another conversation with CEO Vlad Tenev, they talk about implementing something called Code Yellow. An engineer says that maybe we should consider an all-hands-on-deck situation. Tenev seems to agree and says, quote, only the paranoid survive. All of this, guys, came out as part of discovery in a class action lawsuit. The plaintiff's lawyer argues that Robinhood didn't do enough to protect investors and, quote, kept its doors open, unbeknownst to the general public, while it was teetering on the verge of collapse. And in response, Robinhood says, we dispute the plaintiff's allegations. The communications are consistent with Robinhood's focus to take appropriate incremental measures to mitigate risk. Guys, back to you.
To me, this sounds like a code red, Kate. I guess my question is, obviously, the company has changed quite a bit since they had this moment of crisis about 9 months ago. But do these interactions, do those messages reveal persistent problems that could still be at the company today?
So that's what the lawyers argue. Well, it is sort of a look at this one-time event. They called it a Four Sigma event at the time. And the company has argued that there's nothing that they could have done. This was unforeseen and that all of the measures they had in place were appropriate and the problem was solved. The lawyers, meanwhile, say that some of the conversations show that the executives here knew this was coming. They called it a tidal wave of volatility and said that there wasn't enough attention paid. And they, meanwhile, were focused more on things like the Super Bowl ad, marketing, and adding new users. So a difference of opinion there, but it's interesting. We had Bob Pisani reporting this week on Gary Gensler coming out with a report on this entire saga. People have been waiting for that for months. And I'm told that the SEC and FINRA also have access to these documents. So it'll be interesting to see if there's anything in there that actually comes out in a follow-up report from Gary Gensler.